Hey guys, great to be with you again. The rolling option strategy that I taught you last time is one of my favorites, but today I'm going to take it to a higher level. I'm going to teach you how to use options to double dip. I want to remind you this is part of a series, so if you haven't checked out parts 1 and 2, please go and do that first and then come back and join us here. Last time we talked about leverage, the kind of leverage you get when you learn to trade in the U.S. options market. Leverage is God's key to wealth creation. And the cool thing about options is it allows you to buy 10 times the stock for the same money, or you could say buy the same stock for 1/10 the money. So it's like every dollar you've got in your trading account becomes worth $10. And that is powerful. Now, if you think the 228% return with rolling options was pretty nice, this is going to blow you away. I remember I had this talk with my son-in-law, Dave Huber, one time. He was talking about something's too good to be true. And I said, don't ever say that again, Dave. So let me ask you this. What if God decided to take on the form of humans so that he could send his own son down here and die in your place, even when you don't deserve it, when you deserve to go to hell, and he dies in your place, pays your sin debt, pays the ransom for you, buys you away from Satan and hell, and sets you free? Does that sound too good to be true? Well, yeah, it does, but it's true. The same God who did that tells us that we're supposed to take care of our families financially. And guess what he has done? He's put some things on the shelf for you to use with your family. This thing called double dipping that I'm about to show you just uses something Wall Street built for themselves. I'm going to show you how to use it for you. Okay, so what are we going to do now? We're going to add a component. Instead of only using call options like we did in the last video, this time we're going to also use put options. Now remember, there are two kinds of options. The call option has potential to make money when the stock moves up. The put option gives you the potential to make money when the stock moves down, which your neighbor doesn't even know about that. That's why when he sees a bear market, he says, oh, it's a terrible market. And you get these skill sets, you're thinking, there is no bad market. So it's not all that different than what we did last time with just the call options. In fact, it starts the same way. When that stock bounces up off that support line, just as it moves up a little bit, we're going to buy the call option, just like last time. Now, when the stock gets close to the resistance line, almost there, we're going to sell that call option, just like last time. But here's the new part. When it hits that resistance line and bounces down, we're going to buy a put option. So now we buy the put as it bounces down. And when that stock rolls all the way down to that support line, right before it gets there, we sell the put and make a profit on the put. So notice we bought a call and sold it, and then bought a put and sold it in the same amount of time that last time we only bought and sold a call. So now we've doubled the money in the same amount of time. Double dipping, right? The stock rolls up right before it gets to resistance. We sell the calls. Now we have extra money. We can buy more shares. So we turn around, and when it bounces down a little bit, we buy the puts. We wait for it to roll all the way down to almost to the support, and we sell the puts for more profit. Now we've got a lot more money, so we turn that and buy a whole lot more shares of the calls as it bounces up right there. And then right before it gets to resistance, we sell the calls. We turn around, buy the puts as it moves down a little bit. And then when it gets down to the support line, we sell those puts for a profit. The thing rolls again, and we turn around, we buy call options again, and then we can sell the call options at that point. Now, remember, we learned that when this thing breaks the pattern and goes up above that line, you just leave this stock, go find another one that's rolling, and start over with that stock. I hadn't shown you the money yet. Would you like to see the money? You better sit down. Go ahead, sit down. Okay, here we go. Double dipping strategy looks like this. It starts off the same as with the call options. Now, by the time you see this, this is just an academic example. This could have been a real play back when the dates were on this, which was August 2023. So here's what we're going to do. We're going to buy 12,000 shares of the call options on August the 3rd. Now that's going to cost us $30,000. So that's our investment. Now remember, you can do this just as easily with 3,000 or 1,500 or 1,000 or 500. So you make it fit you. In fact, when you're starting out and practicing, you don't want to do it with 30,000. We call it small money trading, and that's what we want you to do. But let's just use this to keep apples and apples, right? So here we bought 12,000 shares with $30,000. We were able to do that because instead of paying $25 per share, we paid $2.50 per share for the call option. We controlling the same number of shares, though, for 1/10 the money. Okay, so now when that stock rolls up, we sell those call options for $3.65, and that gives us a profit of $13,740. But instead of waiting 2 weeks and catching the next move up, we're going to turn right around and buy puts, because the puts make money when it rolls back down. Think about that a minute. Let it roll around right up in here a little bit. On the 8th, we buy 15,500 shares. Notice it's way more shares than 12,000 because we made the money on the calls and we put that into play. So now we buy $15,500 worth of put options at $2.80 per share. And then when the stock rolls down on August 18th, we sell the puts, and we sell them at $3.64 a share times 15,500, and that puts $56,420 back in the account. So the profit is $13,020. So now we got more money. So we turn around, it rolls back up, we buy the call options again, and since it's rolled down, the call option price is lowered to $260. We can get those shares. Now we're buying 21,700 shares because we're leveraging so much and we're making profits. We can roll back into the play. We're getting double leverage now because we got the calls and we got the puts. It's 2 times the leverage, times 10. Now, when the stock rolls back up to about $28 per share, we can sell that call option for $3.39. It puts $17,035 profit in our account. Got more money. So let's turn around and buy the puts. We're at the top of the roll, right? It's bouncing down a little at about $27.67. And so we can buy those puts for $2.70 a share. It rolls down. It approaches that $25 a share area. Before it gets there, at about $26.40, we're going to sell those puts for $3.25 a share. Now we made another $14,919. So then once again, it hits support on September 18th, bounces up to $26.30. We can buy the calls for $2.66. Now we're buying 33,900 shares. Wow. And this is just with Wall Street's money, right? This is Wall Street's money at this point. You'd only put 30,000 in. You're risking Wall Street's money now. Isn't that cool? So the stock rolled back up to 28. We sell the call options. We can sell them for $3.39. It puts another $26,612 in the account. Now this is getting crazy exciting. We can buy a lot more shares now. So what do we do when it bounces down a little bit off resistance? Well, we buy the puts again. Okay. Now we can buy 40,900 shares and control that many shares of this stock for just $2.80 a share. When that stock rolls down to the support line and hits $25.94, we sell those puts for $3.92, and that puts another $45,820 in the account. Okay, now the stock's about to bounce up again, and it's November the 8th, 2023. Now we can buy even more shares, 61,600 shares, and that call option is falling back down in price. It's only $2.60 a share. And then when that thing rolls back up to resistance, we sell those calls, 61,600 shares of those calls for $3.61. That puts another 61,908 shares in. Well, let's try one more put. So on 11/28, it bounces down off resistance. We can buy the puts for $2.80 per share. It moves down a little bit, gets a little bit squirrely down there, so we go ahead and sell it pretty quickly on 12/7. But we still can make $3 per share, so that puts another $15,582 in the trading account. Are you ready to kind of go down that profit column and add it up, or you think you need to sit down? Go ahead and sit down. Okay, you ready? Here it is, $208,644 profit. It jumps from 228% return to 695% return. In other words, you turn $30,000 into $222,068 in about 4 months. Okay, now you have permission to lose sleep. That, ladies and gentlemen, is a 695% return over that 4 months. Now, if you could do a play like this, maybe with a different stock, 3 other times, that would be a 2,015% annual return. Not saying you could find them every time. Usually you can find them. I mean, there's stocks everywhere and opportunities every day. And we're going to help you learn how to find those at TRADEway, of course, teach you exactly how to go get them. We're even going to help you find them, right? Well, what if you only made half that? I mean, wouldn't 1,000% return in a year be pretty good? Well, what if you had some losses along the way doing some other things? Maybe you did a put or a call play or stock play and you lost some money. So what if you only made 500% in a year? And guys, think about this. Making that kind of return as opposed to 5% return is not rocket science. It's just skill sets. And that's what we want to help you with. We've helped thousands of people with it. We want to help you with it. And then after you've mastered several skill sets or strategies, then whether the market's going up or down or sideways or whatever it's doing, you have strategies to match it. And that's what this is all about. So guys, we enjoyed being with you. We're just about out of time. What I'd love for you to do, if you love the show, is just go down there and check the links in the description below, and we'll see you next time.